career. I bought an option on a small electric car company and I didn't understand how options worked. And basically the decay in the option
Mm,
took my position to zero. And so for anybody who wants to get into options, they're very complex.
very
They're very
complicated.
risky.
Yeah.
I try not to play with them too much now, but
Mm.
understand the way that they work before you even try that. That was a huge mistake I made probably the first month of my career.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through property, investment, and business. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
And we are live. Hey everyone, welcome back to another episode of the Bricks and Bank podcast with Steph. I'm your host, Stephanie, and today I have an amazing guest, Josh Fuhr, who is an accomplished consulting, sales, and operational leader. He's an expert stock picker and a portfolio consultant. So if you're interested in the stock market, you want to make money off Forex, this is your guy. So a bit about Josh. Josh is an entrepreneur who has scaled a consulting business of $7 million, only to see it collapse during COVID, a setback that fueled his reinvention. Now, he's running the Portfolio Consultant Substack newsletter. He delivers smart stock picks for everyday investors, blending day trading savvy with a minimal time commitment to achieve big returns. Josh is recognized by White House, United Nations, and Inc. magazine. He's an expert pattern recognizer who simplifies finance for every single person. From RV adventures near Yellowstone's Bison to Boston financial myths, he has offered a fresh perspective on building wealth that resonates to anyone looking to secure their future. Ladies and gentlemen, join me in welcoming Joshua. Yeah,
Thank you for having me. I'm excited to be here.
welcome. Like your profile is just amazing. You're not just an entrepreneur. You've reinvented the wheel. Tell me about what happened during COVID. Like, how did that hit you?
Yeah, so I was running a consulting company before this.
Yeah.
Started it with some family members and it was going really well. We were working with hospitals, doing supply chain management for them. And as soon as COVID hit, basically all of our clients said, hey, we're too busy dealing with COVID right now. We don't have the resources to do these kind of projects that you're doing. And so slowly our projects were put on pause. And eventually the company just collapsed and it was really difficult. It was my life's work. It was something I loved doing. I made a lot of money. It was a perfect situation. And then it was gone. So was forced to reinvent myself and look for something else.
Wow, that's crazy because I mean, one would think you would thrive in such sector. You were in the health sector. That was the health sector, right? So how come the COVID messed it up for you? COVID was supposed to be like an opportunity booster for people in the health services and tech.
Yeah.
Looking back, what would you think was it because it was supply chain? Was it because it was physical stock?
Yeah. I think the biggest thing for us is that our service was something that saved hospitals money. It was a great thing for them to do every couple years, but it
Mm,
was more optional. It was more of a, hey, let's finally do this project. Let's save some money. Let's fix things. And then when COVID happened, we were not positioned to help with COVID. So we kind of got squeezed out of the picture that way. So in hindsight, we could have positioned ourselves better to put ourselves in that situation, but at the time we didn't.
okay, so was the COVID the turning point that made you move into finance and investing, or was it something else along the line?
Yeah, I think after COVID, I kind of explored some options. What am I going to do with my life? What's my next career? I tried Amazon. I tried a bunch of different business ideas. And the one that really stuck with me was trading. I loved it. I loved the way that it had puzzles that needed to be solved. I loved that I could scale it as big as I wanted to based on how successful I was. And I just loved looking at the charts. Like I wouldn't get away from the computer. I wouldn't stop looking at them. And I still am like that. I look at charts, 8 hours a day and I never stop learning. I never stop loving what I do. So it was just something that stuck out to me as this is the path that I need to take.
Wow, that's impressive because I can get overwhelmed looking at stocks. And I know I'm not just speaking for myself, I'm speaking for many of our listeners because, to be fair, it's overwhelming. The charts keep going up and down, and you're not sure whether you have to make the right jump at this time. So, how how did you come across that passion of coming into the market, understanding the market, and making trades that would win? How did you get into? Is this stuff you did before the businesses, or you've just always been a geek for trading?
I've never, before that, I wasn't a geek for trading. I've always
Okay.
been interested in like problem solving and things like that.
Mm,
Before that, I didn't even really manage my own stocks. I had an advisor and I did a little bit with crypto. I bought some Bitcoin and some Ethereum, but not based on any real like trading principles, just on, hey, this thing is buzzing. I think it's going to
mm,
go up. So that was my experience. And so that helps me understand like, what does the typical retail investor think? You know,
yeah.
why do they do the things that they do? So it was just fun to continuously improve, like continuously learn, have a better success rate, make more money per trade, things like that. It was just this continuous improvement with like instant feedback. If you do the right thing tomorrow, you're going to wake up with more money, and that's a good feeling. That's a fun process.
Yeah. So tell me about a bit about your background. Do you have like background in finance, or how did just tell me what you studied in school? We just want to get to know you more, if you don't
Yeah,
mind.
sure.
Yeah.
Yeah, so I went to a university here in town, smaller university, and I
Yeah.
studied just general management and entrepreneurship. So I always knew the consulting company that I had started was something I always wanted to do, maybe since I was 14, 15 years old. So I kind of went to school like, okay, how do I set myself up to make this successful when I get out of school? So
Mm,
studied general management, entrepreneurship, started an entrepreneurship club, participated in pitch competitions, business plan competitions, worked with other entrepreneurs. So my background was really in like general management and entrepreneurship. So in terms of how did I learn about trading? Uh,
yeah.
that all came kind of after college, even after COVID.
Mm.
So yeah, no,
So
go ahead.
do you have like a group of people that you work with specifically in terms of trading, or if you're just like a lone ranger, you're just trying to do? Because I know you said you were working with your family on the consult in the consulting.
Yeah,
How
I
is
think
trading for you
yeah,
right
right
now?
now it's really a Lone Ranger type of thing. Um,
Okay.
and it can be a very lonely job. It can be, you're on an island, you don't have anybody to share ideas with. So
Yeah.
there's communities out there that I'm a member of and, you know, talk to other people, share ideas, see their ideas, some online communities. So that definitely helps.
So when it comes to trading, many people say it's like a very complex area because, to be fair, it's quite complex. You're not just looking at one thing, you're looking at other technical analysis. You're not just looking at the fundamentals, you're looking at the technical analysis, you're looking at the news in order to make a trading decision. So do you get to teach people how to do that? I know through your newsletter you offer insights to people. So how are you able to break down these complex strategies into bite-sized steps for the everyday investor?
Yeah. So, in my journey to learn trading, I took the same journey everybody else did, where you start out great. You think this is so easy. I can't believe I made money my first day. And then the reality sets in that, okay, now I'm starting to lose all the time. What's going on? So there's this trading journey that you go on that's very complex. It's very disheartening, and ups and downs. And I've experienced that, and I know what works and I know what doesn't because I've tried everything. I've
Yeah.
tried things that just don't work. And I think through this newsletter, I like to help steer people away from the things that just don't work and just kind of distill it down to what are the like five top things that do work in terms of technical analysis.
So what are those five top things that we should be looking out for?
Yeah, so there's a few kind of indicators or strategies that really work for
Mm,
technical analysis of a stock. So when I say technical analysis, what that means is that stocks have patterns. And so people that have never day traded, have never like dug into this, they don't know that stocks follow almost like these preset patterns. And so
Mm,
you have to put aside what's happening in the news, what the TV is telling you about the stock, and realize that it will follow a pattern. And those patterns continue for a while, and then the pattern kind of hits its exit. So that pattern will break and a new pattern will emerge.
mm.
So that's what technical analysis is about, is trying to identify these patterns where you can buy low and sell high and make the most amount of money just following these patterns. And it's if you would have asked me in 2020 if stock patterns were real, I probably would say, no, that sounds fake. But here I am. And that's how I make my money, is following these patterns that the stock market gives us.
Wow, so you're basically a day trader and you're crushing it at it, because many people just see trading as a gambling, just go to gamble. So when you tell people, oh, you're a trader, they don't see you as a serious person, because like, oh, you're just gambling through the markets, and they don't necessarily see it as a real career pathway. So how do you push back on those negativities and those myths that comes with the profession?
Yeah, I love that question, because day trading done incorrectly is gambling. There is a way, there's many ways that it still is gambling if you do it wrong. An
Yeah.
example of that is a lot of people like to bet on the earnings report of a stock. So
Yeah.
this week we have a couple major stocks that are reporting their earnings, Google and Tesla, and they will probably go up 5-10% that night. And so a lot of people like to put their chips down and say, I'm going to bet Google's going up. I'm going to bet Tesla's going down. That's gambling. You have no control over that. That's a
Mm,
really bad way to approach trading. But when you remove that and you start looking at the patterns underneath, there's still an element of risk to it. You can't win 100% of your trades. I don't win 100% of my trades. But I have
yeah.
like an 80 or 90% win rate. And so it's all about finding when's the best time to get in, when's the best time to get out. And when you're wrong, making those losses really small. So if you think of like flipping a coin, you don't want to flip a coin 50-50. But if I gave you a coin that, landed on heads 80% of the time, that's a good coin to flip. And then on top of that, when it lands on heads, you're going to make a lot of money. When it lands on tails, you're going to lose a little bit, but not as much as you would have made. So good day trading is about creating those ratios.
So for being a portfolio consultant, how do you advise your people? Because sometimes people feel like when it comes to trading, it's just forex. We're just trading currencies. Some other people just rather trade commodities like gold, like and like oil stocks. Others just do futures and forwards, while others will just stick to crypto. So how do you advise someone like starting out? Because most of our listeners are starting out their investing journey. So how would you advise people to do they just focus on one class of assets, or do they mix and match and get a balanced portfolio?
Yeah, I think, my newsletter is really focused on the investor class. So people that
Mm,
want to put money in and leave it. I day trade for a living. I'm in and out in a day or a couple days, but that's not really the audience that I'm looking for. I'm looking for people that have jobs, they have some extra money, and they want to,
mm,
pick a stock, own it for a few months, maybe a few years, and then sell it. So you can kind of take those patterns that happen on a small scale and expand them into a large scale. So, kind of to answer your question, is uh, there's always something in the market that's going up. So, as we're speaking today, we've just gone through this crazy tariff crash. The market's down, 15-20%. It's starting
yeah,
to stabilize a little bit, but people are freaked out. There's a lot of fear. Uh,
yeah,
but what people don't realize is that underneath kind of the headlines, underneath the Dow Jones and the S&P,
mm,
there are things that are going up. So when there's bad news, certain asset classes go up, certain asset classes go down. And what we try and do is help people find what's going to go up. What's like the charts will tell you that the narrative is going to change around a certain asset class here soon.
yeah,
And it might be time to put some more money into US stocks or US bonds or European stocks or emerging market stocks. So there's always something that's going up.
Exactly, because I know back then when I learned about trading, we were taught about the institutional investors, which who are the big boys. These are the insurance companies, the pension funds. They have all that money and they're able to pour it into the stock market. So they make the biggest move. And if they make a move, it's going to significantly affect the market. So in your strategies, do you basically follow these big boys in making your trade? Because most times I said, do not trade against the wave, like follow the wave or follow the markets.
Yeah. Yeah. So I think kind of building off what I just said is you have to be willing to step into an area where you're a little bit uncomfortable, where
Hmm.
the narrative on what you're investing in is currently really bad. So the best time to buy a stock or whatever instrument, the narrative is never like that good. You have to think for yourself. You have to say, okay, I think the tide is going to turn in this area here soon. And
Yeah.
that's something that the institutions do to keep you away from that stock. They don't want you in that, but there's some tools that we have and that a lot of traders have that shine a light on what are the institutions doing? Like what are they
Mm,
saying and what are they doing are usually the complete opposite. And there's some really interesting examples of that recently, but one of the stocks that we're currently recommending is Victoria's Secret, the fashion brand.
mm,
And the owner of Victoria's Secret recently bought, I think, tens of millions of dollars in stock. So the stock's way down. It looks terrible. People would look at it and be like, I don't want to buy that. That's a really bad idea.
yeah.
But the majority owner of the company has just like doubled their shares. They just
Mm,
doubled their bet. They see something that we don't see yet.
yeah.
And so the institutions will often say the exact opposite of what they're doing behind the scenes. And there's ways that you can expose that.
So let's talk about your newsletter. It seems like your subscribers get a lot of value. So can you just share what it's all about?
Yeah. So the newsletter is really focused on expert stock picks and education. So the way that I came about this was friends and family were interested in like, what are you doing? And so
Mm,
kind of helped me share with them, what's my strategy? What am I picking? And so that they could follow along. And so what we like to do is we like to give enough education so that people feel comfortable with what we're doing. Because a lot of times you're buying a company that you don't even know what they do. If you're one of our followers, I've never heard of this company before. I don't feel comfortable buying this. So we give them enough education to show them that we have certain patterns we look for, that they occur all the time. And here's how they resolve themselves. And here's why that's a good opportunity. So the education is kind of the first part. We have some articles on different patterns, different, things about the market. And we use, like I mentioned, we use like 5 kind of key technical patterns that we look for. And we build on those. And then the newsletter is focused on giving you exact stock picks that you can go ahead and execute in your account.
mm,
And so we'll give you the stock symbol. We'll tell you exactly where to buy it. Where to buy it is really important
yeah.
because you can gain an extra 20 to 30% by buying it at the right spot. So the newsletter comes out on Sunday in terms of like a weekly recap, but
Oh, okay.
throughout the week, we are alerting stocks that are there for you to buy. And it's not something you have to go out and like buy today. It's usually like it'll hang out in that price zone for a couple days, couple weeks. So you have some time to blend it into your portfolio and then giving you a couple ideas on where maybe you should sell that.
Mm,
And that's something that investors never think about is when do I sell a stock? It's not,
yeah.
it's probably the biggest mistake that they make.
Yeah, because many people just hold stocks for the long haul. They see it as like real estate. You just buy and
Yeah.
hold even for the
Yeah.
next 10 years. So I think that's the rationale behind buying it that way. So that's why when the prices keep fluctuating, everybody's mind is like, oh no, I spent this much to buy and I'm supposed to hold it. I plan to hold it for the next couple of years. So are you saying that in your newsletter, you tell people when to buy and when to sell these stocks?
Yep. So when we recommend a stock, we'll publish kind of like a report on that stock
Mm,
and it will give you exact numbers of where you should buy it. So using that Victoria's Secret example, we recommend that if people can get it for under $20, that's a good time to buy it. And then there are these kind of predetermined checkpoints on the chart where the stock might pause, it might come back down. There's barriers that the stock needs to get through. And so we recommend that you sell at those certain barriers, depending on like how long you want to hold it. It might hit barrier one in a few months, it might hit barrier two in a year, and it might hit barrier three in a couple years. So it just depends on how active you want to be.
Nice. So, looking at like a beginner's portfolio, what is your advice? Do you advise a mix of total portfolio full of stocks, or should someone be buying stock and also thinking about forex and thinking about commodities and thinking about crypto? What's your advice for people? A lot of people have this shining object syndrome, so they were buying stocks because she said, "Oh, Victoria's Secret is gonna go up there tomorrow." Oh, there's this new crypto that came out and the white paper looks good. Let me buy some of it. So very haphazard investment. So what's your advice for someone who's just starting?
Yeah, I think, when you bring up crypto, one
Mm,
of the things that I would avoid is a lot of these like pump and dump things where you think you're going to get rich. It might go up 1,000% in a day, and maybe you're the lucky guy that caught it. That's going to end up burning you in the long run. So, but there are some major cryptos that look really good. In fact, right now, probably this weekend, I will recommend Ethereum to people. Bitcoin's doing really well today, but Ethereum's kind of lagging behind it. So some of those major cryptos are great options to include in your portfolio. And I think what people need to understand is that every instrument that's traded, whether it's stocks, bonds, commodities, forex, crypto, they all use these patterns. The patterns can be applied to every single one of them the exact same. So once you learn these technical analysis techniques, you can apply them across the board. So, you just kind of have to follow the wave in terms of when does it look like stocks are slowing down and when does it look like crypto's, about to catch fire and have a really good run. So
yeah.
definitely diversify into those different asset classes, like depending on the time of year, the market cycle.
Yes, okay. I know a lot of people come to talk about AI trading for you. So do you recommend those AI tools when it comes to trading and investing, or you just tell people to stay clear from such
Yeah.
tools?
Yeah. I like AI. I use AI for some things in my business not related to trading.
Hmm,
I'm using AI to build an app right now, and it's an incredible tool and process. AI trading, the way that they label it, it's truly not AI trading. It's typically like when this line crosses this line, we're going to buy. And those signals have been around for a while and they have a good success rate, but they're truly not AI trading. So those signals can be wrong. You want to get a mixture of signals. You want to get, 5 or 6 signals aligned at the same time to be
yeah.
successful. So I personally would be careful of those. And companies now just throw the word AI on something, and it's truly not. It sounds good. People sign up because they like the name, but it's truly not AI. So I would be careful with those.
So talking about AI, do you recommend people investing in AI stocks? Because a lot of these AI companies are just like venture capital startups, and they're just banking on the trend to garner publicity, gather money. There's no really, there isn't any real fluff behind them. So would you advise people to purchase into all these AI stocks that are out there today?
Yeah, I think that last year there was a joke about how when a company mentioned AI during their earnings report, their stock was guaranteed to go up. So
Yeah.
companies that were in random industries just said the word AI and their stock would go up. What we've seen recently in the stock market crash, a lot of that was the AI bubble. So
Mm,
a lot of that was these companies like NVIDIA and Microsoft and Facebook and all these AI companies that are at the forefront of AI actually breaking down. Um,
yeah.
So when you have a market cycle like that, you have this euphoria and it's going to calm down for a bit. And then there will be another time in the coming years where we'll kind of calm down on the AI stuff. That will be a good time to invest in those because AI truly is the future. It's not necessarily ready yet.
Mm,
So people are kind of speculating on, oh, it's going to change everything. That's going to happen slower than we think.
yeah.
So people that are interested in AI are going to get another bite at the apple here. So if you have a favorite AI stock and it's really high right now, don't chase it. You know, wait for it to come down 50% and invest in it. Because I do think that that's, as a user of AI, it's changed my whole business. So there's going to be a lot of money in that in the future. So I would, I'm always hesitant to kind of give like a blanket, hey, buy this because
Yeah.
it could go down before it goes up.
Mm,
And so I don't want that to happen to anybody. But in the long run, I do like AI stocks.
okay. So what would you say are the top three things you'd see investors doing wrong today?
Yeah, I think the first one we've talked a lot about is just not understanding technical analysis. So you can create situations where you're going to win more often than not. So I don't want to go too deep into that because we've talked a lot about it. The second one I mentioned earlier is investors never sell stocks. So
Mm,
I was talking to some friends and trying to understand, like, when do you sell a stock? And I got two answers. One was when I need money. Maybe I need to withdraw this money. I need the down payment for a house or buy a car. So I'm going to sell it tomorrow because my down payment's due. So is that the best time to sell that stock? Probably not.
mm,
That's just a random time. So investors need to learn when and how to sell a stock. And that's something we focus a lot on is when to sell it. And I think the reason behind that is if I sell this stock that's doing pretty good, where am I going to put the money? Where am I going to go next? And
mm,
so that's kind of why we built this community is, okay, sell this stock, look at the list of other stocks that are getting ready to go up, put your money in those. So yeah, I think those are two major ones. The third one is when people are buying the euphoria. So there was
mm.
a quote by Warren Buffett. I don't know the exact quote, but it was something like buy when others are fearful and sell when
So that,
others are full of greed or something like that.
yeah, I think of
Yeah.
sense such like that.
Yeah. So the biggest mistake is that their buddy tells them, hey, I bought Bitcoin because I'm up 30%. And they
Mm,
think, I want to be up 30%. And so that fear of missing out, one of our strongest emotions comes in
yeah.
and they buy Bitcoin. Well, your buddy bought it at a good spot, but you didn't. And so it immediately crashes 30% right in your face. Then you sell it at a loss because you're frustrated.
Mm,
Well, when things are bad is when you should jump in and you should avoid the euphoria because the price of that stock is already way too high.
makes sense. So at that point, do you recommend people to look at other stocks instead of being focused on that one that is doing well?
Yeah, I think so. I have what's called a screenshot rule. And what that means is when I take a screenshot of a stock and I send it to my buddies that are into trading,
Mm,
I need to sell that stock because what that's telling me is that that has done so well that I want to share it with people. I don't share with people when something I buy goes up 1%. I
mm,
want to share the big winners with them, the things that are outliers. So if I bought a stock and it went up 200% and I take a picture of that and I send it to a friend, that means that's a total outlier and I just need to take my profits and go home
yeah.
because the chances of that going down in my face are pretty high. Uh,
Mm,
so yeah.
okay. So talking about stocks, what do you say? Do you ever recommend people to buy into commodities or you just focus on stocks? That's one thing. Also, people buy stocks because they just want to get paid dividend. So they buy it and hold it for the long run, which is one of the things you said that investors are doing wrong today. They buy it and hold it for the long run because they just want to collect a bit of dividend here and there and build up their portfolio. So Is that a reasonable tactic? Because I've heard a couple of advisors, financial advisors saying, oh, buy this stock and at the end of the year, it's going to pay you a dividend, which is reasonable. So many people go for that safe option. Is that advisable from your expert perspective?
Yeah, so I think, you kind of have to know your audience when you're giving advice like that, where
Mm,
if you have somebody who does not want to be active, does not want to you have to be active to grow your portfolio. You don't have to spend hours a day,
mm,
but to somebody who just doesn't ever want to look at the stock market and they want to make a little bit of money, not lose money, but make a little bit of money,
mm,
dividend stocks and dividend ETFs, those work. Like you might get 5% a year, but those stocks can also go up and down. The stocks that are paying a dividend, they have highs, they have lows, they have good years, they have bad years. They kind of
yeah,
even out. The ETF does a good job of evening them out, but you're never going to reach the financial promised land with dividend stocks. You're not going to
mm,
lose your everything, but you're not going to ever get ahead doing that. You'll probably just grow with inflation. In terms of commodities are really difficult for your average person to invest in, because a lot of them are futures contracts, are really
yeah,
leveraged. Those you can lose your whole house in a day. So you have to be really careful with futures contracts. But right now, I'm actually short natural gas,
mm,
and there's some ETFs that help you do things like that. There's these leveraged ETFs and unleveraged ETFs. Gold has been on a crazy run
mm.
lately. Silver is kind of setting up to follow in gold's footsteps. So I think the key with, like I mentioned earlier, the key with anything you invest in commodities, be careful of the narrative. Look at the chart, understand the chart, and buy it at the right spot,
Mm.
because the narrative that you're hearing, like I said, might be opposite of the truth. Um, so just be careful of that concept.
Okay. So what would you say is the balance between risk and reward when it comes to day trading? And how would you advise new investors to approach this challenge?
Yeah. So, I personally look for like a 3-to-1 risk reward ratio. So when I buy a stock, let's say I buy it at $100, and my target is $130. Um, I will let that kind of work its magic. But if it goes down to $90, I'm going to sell it. I'm going to take that loss there. Um, so the best thing is to have like a predetermined risk reward ratio. Um, and one of the best ways to avoid like a major crash in your portfolio is to diversify. I
Mm,
never recommend you put your whole portfolio into one stock or even 5 stocks. In my retirement account, which I try and like stay away from, I try and let that ride for a couple weeks or months at a time. I think I own about 25 to 30 stocks. So
mm.
those are all ones that I picked, at their support level. I have uh, targets for them that I'm going to sell them. But my diversification is about 25 to 30 stocks in there.
Oh, nice. So many people tend to invest in ETFs because it is sort of a diversified stock platform one, and also gives a sort of safety. So would you recommend ETFs for people that are just starting out their investment journey, or they should just be aggressive and go and pick stocks that would that would that would rise and make money? What would you
Yes.
advise?
Yeah. So kind of same thing with the audience. If you're somebody that wants to buy an ETF and never look at it
Mm,
for the next 10, 20 years, go out and buy the SPY, which is the S&P 500. Go out and buy QQQ, which is the NASDAQ. And there's a couple of different variables of ETFs like that.
yeah.
Those are always a great idea. Just buy and hold them. They're going to go up. But your expectations for that are you're going to make maybe 5 to 7% a year on average.
Mm,
Whereas if you want to be a little bit more aggressive, you want your returns, but you also want to commit an hour or two a month to making those moves,
mm,
I would recommend buying individual stocks. And the reason for that is ETFs do a really good job of smoothing out what's going on underneath the surface.
Yeah.
So every day stocks are going up, they're going down. Like I said, some are doing good, some are doing bad. And so the ETF just averages that. And so it just slightly goes up. But what we want to find is the stocks that are going to go up and get rid of the ones that are going to go down. So that way you can really like multiply that return by not having that smoothed out average. And so that's like the big concept behind us, like letting investors take control of their retirement and take control of their journey. So yeah, there's nothing wrong with just buying the S&P and waiting 30.
The way you put it. Okay, that makes sense. So what's one pattern in your experience trading? What's one pattern in data that you've spotted that surprised you that in recent times still? What's one pattern that has surprised you? Maybe you were anticipating it was going to go one way and it just tanked.
Yeah, I think the one pattern that sticks out to me is you can draw these trend lines on your screen. So you
Mm,
just draw a simple line and price will respect that line. It will hit that line and turn around. So what retail investors don't do a good job of is they'll look at the chart, they don't have these lines on there, and they think, oh, it's going up. It's probably going to keep going up. But what
mm,
institutional investors have is they have this line on their chart and they know that as soon as it touches that line, it's going to go down or it's going to go up, whatever, direction the line tells it it's going
yeah,
to go. And so it has these patterns. And to a newer investor, they would think you're talking crazy. Like you just draw a line on the chart and it just goes up there. Like that's and sometimes they're horizontal lines, sometimes they're at a 45-degree angle,
yeah,
and things like that. But the stocks move in these patterns. So when I first
yeah,
started, I would buy something because an indicator told me to. Let's say the MACD crossed over. It's a technical indicator that helps people trade. And so when the MACD crosses over, people say that's a buy. But when you have that line on your chart, you know that that's a fake out. And there are so many times in my early career that I would buy that just to, I mean, you looked at the chart and here I am at the very top buying it right before it crashes. So just having that, like that line on your chart and having the wait for it to approach the line and then make
yeah.
your decision can make you so much money.
So I know that you talked about the technical indicators, technical analysis. Can you just explain to like some people, because a lot of our listeners are not as savvy as you are in terms of, can you just explain what technical analysis is and why it's crucial? Why it's a crucial point of analytics for making stock picks?
Yeah.
Yeah.
So what's referred to as functional analysis is um, like learning about the company. What do they do? How much
Yeah.
money are they making per quarter? What's the earnings? That's kind of the other side of stock trading that people are used to. So
Mm,
technical analysis refers to all the numbers behind things, like um, what's been the average price for the last 50 days? Um, how far away from that 50-day average is the price currently? And
mm,
so people have created what are called indicators, and they take all this data in and they spit out another number. And those they have patterns of their own. And when certain things happen within those indicators, those can either be a buy or a sell signal. The problem with them is that they are what's called lagging. So it shows you what has happened. It doesn't predict what will happen.
okay.
It
Yeah.
tells you what has happened. And sometimes that's a decent predictor of the future. But so we use them. We have a certain pattern we look for and we say, okay, do the indicators also support us? So we do
Mm,
the pattern first and the indicators second so that it can support our thesis that we already came up with. So technical analysis includes everything from drawing a line, drawing a horizontal line, seeing where the lowest price has been recently, the highest price has been recently.
yeah.
And those are called zones of interest where you might want to act.
Yeah. Okay. Thank you for that. I mean, it brings a lot of clarity to what we've been talking about. And you mentioned that you would typically advise people who want to go into stock investment that they should have a job to do or something that also brings money because you don't want to bet all your money on the stock market. So people would say that, okay, how do I do my job and combine it with day trading? Is it possible?
Yeah, I think there's a big difference between day trading, somebody who does this full time versus somebody who wants to keep their job and grow their portfolio.
Hmm.
So I would always recommend that people start out with a small amount of money, they get used to it. Then if they have a big amount of money, they grow kind of what they're committing to this process,
Okay.
continue working your job. But people that like, if you just catch the bug and you're just like, I love this, this is like the most fun I've ever had. You have a high stress tolerance, you don't like
Yeah.
sleeping and you want to subject yourself to that torture, then follow that path. But yeah, it can be extremely rewarding.
Hmm.
So that's what I always tell people is like, just kind of get started with invest a little bit, then maybe start swing trading. And if you're good at it, then you can go to day trading, because day trading is a full-time 8 to 10 hours a day job. It's not like something that you can roll out of bed and click a button, Tesla's going to go up today. If you're not putting in, 6 to 8 to 10 hours a day, you will fail at day trading.
Hmm.
And so that part of it is very time consuming. So, I want to kind of caution people that you can make some money, start out, make sure you make money swing trading, and then kind of like do it more often, and then
Yeah.
quit your job once you've done it for a year or two and continued to be successful.
Okay. So can you share your big win moments and your big loss moments in the
Yeah.
market?
Let's see. What was my biggest win was probably actually on Bitcoin. I'm not a big crypto guy. I trade it here and there when it makes sense, but I'm not one of those like Bitcoin maxi guys. But the pattern that played out, I want to
Hmm.
say it was in the fall of last year, kind of November, October, something like that. It was a
Okay.
pattern that is super common. Experienced traders saw it coming and there was a lot of buzz around it. And I was like, okay, I'm going to hop in on this just for a trade. It doesn't mean I'm married to Bitcoin. Doesn't
Yeah.
mean I'm promising it's going to go to 1 million, but it's going to go from 75,000 to 110,000. And it did exactly as predicted. And that was probably my biggest trade. My biggest loss was something really, really dumb that I did in the beginning of my career. I bought an option on a small electric car company and I didn't understand how options worked. And basically, the decay in the option
Hmm.
took my position to zero. And so, for anybody who wants to get into options, they're very complex,
Very
they're very
complicated.
risky.
Yeah.
I try not to play with them too much now, but
Hmm.
understand the way that they work before you even try that. That was a huge mistake I made probably the first month of my career.
Wow. Thank
Yeah.
you so much for sharing that. So I know you've mentioned your fascination with a bison. So can you share about that story and how does it tie to your approach in life and investing?
Yeah. So during COVID, one of the things that I did kind of on this journey of self-discovery of like, what's next? What's next for me? I bought an RV and I started living out of my RV. I went to a bunch of national parks out west, almost all of them west of the Mississippi. And when I was in Yellowstone, I was sitting by the side of the road with a friend in our car, and this whole herd of bison came and just, walked right by us, probably 20 or 30 of them. And they're just like this incredible creature. To me, they really rival the bald eagle as like the symbol of the US. There used to be millions of them. They
Mm.
almost went extinct. They're being kind of brought back now through conservation efforts. Um, but one of the cool things that really sticks with me about bison is that when a storm is approaching, they're the only animal that turns and walks directly into the storm. And they innately know that by taking the storm head on, they're going to
Mm.
get out of it faster. So they're not going to run away
Mm.
from it and prolong it. They're not going to run with it. They run into it and out the other side. And that's something that always stuck with me, like in life. When problems come up, just run at them, run out the other side, and it's going to be over quicker. But yeah, they're just a cool animal. I got to see some a couple months ago out in Utah. Um, Yeah, really interesting.
So when you're living in the RV, was it just you or with your family? Did you have to drag them to your self-discovery journey?
Yeah, it was just me. The first time I went 5 years
Okay.
ago, it was just me. I just got back from another round of RVing this winter, and it was just me and the dog. So he loved it. He loved national parks. He got to run all over and go hiking and do all this crazy stuff that most people haven't done. So he was really happy with it. But yeah, it's for me, it's a kind of a solitary go and think about life, go build a business, go experience new things kind of adventure.
Okay, amazing. This being portfolio consultant, this is your full-time job, this is your business. Are you also delving into other things right now, or you're just laser focused on this?
Laser focused on this. I think a good day trader really only trades like an hour or two a day. You're only actually trading stuff for an hour or two. And the rest of
Mm,
the day you're researching, okay, what am I going to do next? So that's what's kind of why I jumped into this newsletter concept is, all right, I'm researching 6 hours a day. I'm finding all these good opportunities. And sometimes I don't have money left over to buy a good stock. Like my whole portfolio is invested.
that's
There's no
yeah.
cash. So it was a way for me to capitalize on that research that I'm doing every day. Um, and so that's a full-time job. I'm currently in the process of building a standalone website and app for our
Yeah,
users so that they can
amazing.
get the alerts faster, get them easier, um, kind of see things in a different light
Yeah,
versus how they're displayed on Substack currently.
that's amazing. So what's the science behind reinvesting your gains on your trades? Is there a specific percentage you stick to, or do you just go and invest everything back into the trades?
Yeah, so I try and reinvest everything I can.
Mm,
And sometimes it's really hard for me to sell a stock and take money out and pay myself. That's like always been a hard thing for me because I just want to leave it in there. I want it to grow more.
Euphoria.
And so when I take it out, I feel like that's an opportunity cost. So I kind of take things out at the last minute to pay my bills. But yeah, I think, for people reinvesting, the way that compounding works, the more that you can keep invested and keep reinvested, the
Mm,
quicker this goes. And it goes so fast when you start compounding. So,
mm,
if you have a way to work another job to bring in money to pay the bills while you trade or things like that, like the more that you can leave invested, the more it's going to grow. And that's not possible for everybody. That's
yeah.
certain people have a luxury of doing that. But the more that you can leave it in there and the more that you can keep multiplying it, the faster, the end game comes of financial freedom.
Okay, so you said the faster you can get your financial freedom. So what's like the horizon you would give someone to get into it, go full on and come out? So would you be saying, oh, if you stick to the markets within the next 5 years, within the next 10 years, you're going to be better off than where you are now? So do you sort of give people a time horizon to invest, or you just allow them to do whatever they need to do?
Yeah, I would kind of avoid giving somebody a direct time horizon
Yeah.
because you don't know what the market's going to do. Some of that's out of your control and you don't know
Mm,
how that person's going to perform. But one of the things that I like to focus on is taking a person's goal that they already have, that they're already working towards, and pulling that a couple years forward. So
mm,
if you want to retire at 65, we can retire you at 60, put in a little
yeah.
bit of work here. If over the next 20 years, learn how to trade,
Mm,
and you can retire at 60 instead of 65 with two or three times more money that you would have had if you would have stayed invested with a financial advisor. If you
yeah.
want that car, but it's so far out of reach, you need a promotion or you need a new job.
Yeah.
It seems so far away, but we can pull that goal a little bit towards you, sending your
Mm,
kids to college, whatever it might be. Let's pull these goals towards you and actually raise the goal. I want to retire with $1 million. Well, at 65, well, how about we retire at 60 with $2 million? Does that
mm,
sound like a better idea?
yeah.
So this really helps. Putting artificial timeframes on it can be dangerous sometimes if you don't meet that.
Mm,
But let's let's like raise our goals and let's pull them forward.
Okay. So this is our podcast channel is focused on real estate and investment, like what you do. So real estate versus investments, what would you say is like the best way to retire faster? How? I know
I
you'll
don't
be
know.
biased.
I think the real estate guys might come after me, but look, they're both great skills to have. I mean, with real
Mm,
estate, you can build both kind of active and passive income
yeah.
in your day-to-day basis. You know, that can pay the bills. And if you complement it with investing, when you go
Mm,
home at night, spend an hour doing this, spend an hour on the weekend, go buy your houses, go buy your commercial real estate, do all that stuff, but take the money and put it into the right stocks and let that passively grow. And I think
mm,
real estate investors would be really good at this because real estate investing is somewhat passive, somewhat active.
yeah.
And so they get the concept of let's learn this skill. Let's be semi active, semi passive. Let's make a couple moves here and there
Mm.
and to let things grow. And it's so that mindset is already there for people who do this. But yeah, definitely stocks are better than real estate.
So there are so part of stocks that they call the REITs, the real estate investment trust. Would you advise people who are interested in real estate to go there instead of typical stocks?
Yeah, that's a good question. I've invested in a few REITs over
Mm,
the years. It's been a while.
yeah.
I've done actually some investing, I forget the term for it, kind of like crowdfunded investing, where you can give a couple $1,000s and you're part of a big investor group that
Mm,
buys an apartment building. And then, you get your returns on that. So as somebody who's in stocks and not real estate, that was fun for me. That was cool to actually be a part of the REIT. Most of the REITs are actually publicly traded on the stock market and those go up and down. And when the time is right, when the when it's at a certain buy zone, then that might be a great opportunity. They follow the same patterns that other stocks do. So why not?
amazing. Thank you so much for all your valuable insights. We would now proceed to the second part of the show, which is the firecracker session.
Okay.
So, so this is just like a bunch of questions. I'm just gonna ask you quickly, and you're gonna fire back at me,
Okay.
and let me know what's the first thing that comes to your mind. So, if you could give one stock tip to your listeners that would change their investment strategy forever, what would that be?
Learn about support and resistance zones, buy at support, sell at resistance.
Amazing. So you've turned your life on into a profitable venture. If you had to choose one life lesson from your RV adventures that applies to both trading, entrepreneurship, and investing, what would it be?
Get outside and get some sun. You shouldn't be at the screen all day. The sun is our energy source. Get outside, get the sun. Let us do the research for you so you can be outside.
Okay. Looking into the second quarter of 2025, I know people are still like rubbing their wounds and licking their wounds from the Trump trade wars and the US and China trade wars. What's one bold prediction you have for the stock markets? And why should
Yeah, I,
investors pay attention?
yeah, I think the biggest bold prediction I have right now is that retail stocks, as soon as the tariff stuff is resolved,
Mm,
with the countries that the manufacturers do business in, like Victoria's Secret, as
yeah.
soon as Vietnam signs a tariff deal,
Mm,
Victoria's Secret is going to double. So look at retail stocks. They're beaten down. They're beaten to death right now. Buy them. And as soon as the valve releases, those are going to go to the moon.
amazing. It's been great having you on the show today, Josh. How can we reach you? Your socials, your website, and I know you have your newsletter platform. How can we connect with you?
Yeah, the newsletter is the best place right now.
Yeah.
It's portfolioconsultant.substack.com. And if you go to /podcast 30, we have a 30% off discount link for everybody. So that applies to the first year or all your monthly payments for the first year. If you do like a 1 year subscription, that applies to that as well.
Wow, that's amazing. That's so thoughtful. Thank you so much for giving us so much value. I really appreciate it. I will leave the link to the newsletter on the description so the listeners can just go there, click on it, and subscribe.
That would be great.
So, guys, that brings us to the end of another life impacting session. of the Bricks and Bank podcast. I've been chatting with Josh Fuhr, and he's your go-to portfolio consultant and stock pick expert. So till we meet again, let's continue to turn knowledge into action and bricks into bank. I've been your host, Stephanie, and we can call it a day. Cheers.
Thank you.